Hi and welcome to the market update for the final quarter of 2015 leading into Christmas. There's a lot of information about the Wellington market out there at the moment, so I thought I'd do my best to try and interpret that for you to assist you in your thinking for listing and selling property. First of all, I think finally after 7 years we can say quite categorically that this is a seller's market, and to justify that there are some key indicators that we need to look at. The first is the stats, the volume of sales for Wellington. If you look at this graph, there were 572 sales for the month of August, which is a dip down on the 697 for the previous 2 months, but you'll see that this year, 2015, has remained constantly higher than any year over the last 7 years. And so that's enough of a trend to say that market volumes have increased. What that's doing to stock, on the other hand, is that very few properties are being listed, and so we're selling a lot of the stock that we've got on the market. At the moment in Wellington, they say that there are 12 weeks of stock. That's saying if we were to sell everything we had within 12 weeks, we'd be right out. This is compared to a normal average of 21 weeks of stock on the market at any one time, and compared with the rest of the country, only Auckland has less weeks of stock on the market than Wellington. If we look over the last couple of months, in August there were 572 sales, but only 511 houses listed. In July there were 697 sales, but only 611 houses listed. So we're listing about 10%, 15% less than we're selling, which is creating a great shortage of stock. If you look at the real estate market, it's one of supply and demand, and if we have a low supply, which is a record low levels of stock on the market, and by great demand, then the prices will start moving up. Although it's not being seen in the stats yet, because the stats are from sales as they are settled, not going conditional, and so the information that we're getting through is 3 to 4 months old. We are seeing in the marketplace today a very real increase in prices, and particularly with the shortage of stock, we're seeing competition amongst buyers, and that's driving the prices up. And so where the prices have stayed fairly constant for the Wellington region for 7 years, apart from a blip in 2009, now we are seeing the prices start to rise, and that is the start of a market change. And it's happened enough to say that this is a trend. If you look recently, there have been articles from people like Tony Alexander, the chief economist for the BNZ, who's picked Wellington as one of the most likely places that he would invest money in the real estate market. We've got interest rates down, net migration is up, a lot of people returning from Australia. Auckland is relocating for affordability, and I think as a localised thing, the knowledge that Transmission Gully is going through from Tawa to Paikakariki, and then the bypass through the Kapiti Coast through Paraparaumu and Waikanae, is going to change the way that we live, and that we can have a townhouse in the town and on the weekend shift up to the coast. So it will be a change in markets. Traditionally, the last 2 months of the year is where we spike. If you saw the graphs, over the last few years there have been 700 sales, 750 sales in November. For the previous 20 years there were up to 1,250 sales for that November month. So from the 1st of October to the middle of December, those 10 weeks are part of the busiest in the marketplace. And so if you look at the stats for why the Wellington market is depressed, it is purely about the volume of stock on the market. I believe if we had 100 more houses to sell each month at the moment, we would sell 100 more houses. But the start of the process is prices rising, then more stock comes to the market, and particularly at this time of the year, people who are ready, who want to present their houses at the best time in springtime, are about to come onto the market. So how do you take advantage of this? The first key factor is that you need a plan. Plan to be on the market for a 3 or 4 week period with a cut-off date, so that all buyers have a date at which you're intending to sell the house. Secondly, in that time frame, expose your property to the market, because there are a lot of buyers who are joining the market and a lot of buyers who are looking at different things to their normal search criteria. So we're finding that the better marketed houses are having a lot more competition. In the last week, I can give examples of the Miramar property, which had 48 groups of people through the open home. A couple of auctions we've done in Waikanai recently where there have been 22, 23 people bidding for them. So have great marketing to draw those people in, have a cut-off to the time frame where you get those people and hopefully get them in a competitive situation. The cut-off to the process is a date which you say to buyers, here is when we're selling. Don't be lured into selling on the first day because you don't know what other buyers are there. These days, with the ability to hit buyers through the internet, through the websites, we can contact them very quickly. Even in a case in Palmerston North last week where we had a magnificent offer straight up, within 48 hours we were able to get another 9 people through the property who turned up at the auction, and the price sold for a premium above the initial offer. So make sure that you expose the property fully and make sure that the negotiation process, whatever you have to cut off the end of the marketing process, is handled in such a way that you can extract a premium from the market. Good luck with your selling.